Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 28th, 2025, and we're diving into Monro's latest earnings report for the fourth quarter and fiscal year 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Monro, a leading provider of automotive undercar repair and tire services, has just released their Q4 and full year 2025 financial results. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the top line. Monro reported a net revenue of $295 million for the fourth quarter, which is a 4.9% decrease compared to last year. John, can you shed some light on this?
Absolutely. The decrease in sales is primarily due to fewer selling days this quarter compared to the previous year. Despite this, Monro managed to achieve a 2.8% increase in comparable store sales when adjusted for days. However, the company faced significant challenges, resulting in an operating loss of $23.8 million and a net loss of $21.3 million for the quarter.
And how did they perform in terms of earnings per share?
Monro reported an adjusted diluted loss per share of 0.9 cents, which was in line with the forecasted EPS of 9 cents by two analysts. This reflects the impact of higher operating expenses and store impairment costs.
Operational challenges and strategic initiatives. John, let's talk about the operational side. Monro's gross margin decreased by 250 basis points. What were the main factors here?
The decline in gross margin was primarily due to higher material costs, particularly within the tire segment, and increased labor costs due to wage inflation. Additionally, Monro engaged in self-funded promotions to attract value-oriented consumers, which also impacted margins.
Monro has identified 145 underperforming stores for closure. How does this fit into their strategic initiatives?
This is part of Monro's broader strategy to optimize their store portfolio and focus on improving customer experience and selling effectiveness. By closing underperforming locations, they aim to enhance profitability and drive shareholder returns in the coming fiscal year.
CEO insights and future outlook. What insights did CEO Peter Fitzsimmons provide regarding Monro's future outlook?
Peter Fitzsimmons highlighted four key areas of focus: improving customer experience, enhancing selling effectiveness, driving profitable customer acquisition, and increasing merchandising productivity. He expressed optimism about the company's sales momentum, noting a 7% increase in comparable store sales in the first quarter of fiscal 2026.
Did Monro provide any guidance for fiscal 2026?
No, Monro has not provided specific financial guidance for fiscal 2026 at this time. However, they plan to share more insights during their earnings conference call.
Key takeaways. In summary, Monro faced a challenging fourth quarter with a decrease in sales and profitability. However, their strategic initiatives, including store closures and a focus on customer experience, aim to drive future growth. John, any final thoughts?
Monro's proactive approach to addressing operational challenges and optimizing their store portfolio is promising. While the immediate results are mixed, their focus on long-term profitability and shareholder returns is a positive sign for investors.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Monro's performance in the comments below.